A stock market sector that investors furiously bailed out of just months ago is slowly making a comeback. Regional bank stocks are set to notch their fourth weekly gain in a row, tying a January streak as a revival in bond sales from the group reinforced bank resilience. While the sector is far from recouping the losses that Silicon Valley Bank's collapse in March inflicted, the fresh debt sales mark the latest sign that the sector is buckling down for future pressures while distancing itself from the tumult. This is a vote of confidence for the investability of banks. Wells Fargo's Mike Mayo said equity investors are inching back toward the stocks, the analyst added. The KBW Regional Banking Index rose 4% this week on the back of strong rallies Tuesday and Wednesday, bringing the index's 4-week advance to about 19%. Shares of PacWest Bancorp, which has been the worst performing member of the gauge this year, nearly doubled over that period, paring its yearly plunge to 61%. Investors fled the sector in March as the collapses of Silvergate Capital Corp, Silicon Valley Bank, and Signature Bank stunned markets. Billions of dollars of deposits flew out of the regional bank's doors, and the reverberations ultimately led to the downfall of a fourth regional lender, First Republic Bank. Individual traders, to be sure, not everyone sold on the bank stock. Rebound. Individual retail traders didn't waste any time getting out of the sector as they pivot toward technology and small cap shares, according to weekly data from Vanda Research. The impacts of office commercial real estate weakness and potential higher capital requirements continue to weigh on investors' minds. Uncertainties still swirl. Nevertheless, investors are becoming increasingly reassured. Shocks have morphed into earnings pressures rather than solvency crises.